I want to real quick.
Fun.
Yeah, fun. Taxes. On the SALT cap, some congressional Democrats are saying no SALT cap repeal, no deal with the president as it goes forward with his tax plan. Democrats up on the Hill. We know the position that the White House has had for several weeks now, so I'm wondering what's more likely at this point, for the White House to move towards these congressional Democrats, or congressional Democrats, in this case, to back off their position eventually?
We don't know yet. This is democracy in action. This is what's fun about this. We are having discussions. We are certainly aware of the members who have conveyed a strong view about the SALT deduction, and we'll have that. Eager to hear their proposals. Some of them have put some proposals forward. I think I have talked about before, this is not a revenue raiser, so it would be additional cost. That's okay, but then you have to determine either how to pay for it, what other things are cut out, and certainly that would be a part of the discussion.
We heard from the president yesterday about the step up in basis. He sort of laid out the argument as to why that should be eliminated. For wealthy individuals upon inheritance, it essentially lowers the capital gains burden. The Tax Foundation gave an example on $100 million in gains. They say that the tax on that would be 61%. We know the White House's position that the wealthiest need to pay their fair share. I think anyone would agree that $100 million in gains is a lot of money. But I guess the question is whether it's reasonable. Does the White House believe that's reasonable?
I'd have to talk to our number crunchers about the specific example you gave. I don't know what percentage of people have $100 million in capital gains. Maybe you know. That sounds like quite a lot to me. But the fundamental value here the president is conveying is that his proposals are about making a historic investment in education, in childcare. That's going to make us more competitive, to compete with China, to bring more women back into the workforce. He's proposed a way to pay for it that's going to impact, as it relates to capital gains, 0.3% of the population. And the example you gave, probably 0.00, I don't know what percentage of the population. That's his proposal. Statistics with our team to give an evaluation on that.
And lastly, in the American Families Plan, it calls for financial banks and financial institutions to report account flows. The Treasury Department said it would add, quote, information about aggregate account outflows and inflows, basically money coming in and out of one's bank account. And the question is, there's a concern that maybe that's the federal government having too big of an insight into what's going into your bank account and what's coming out of your bank account, along with that it would just make filing your taxes a whole lot tougher.
It's already a pain.
It's already a pain. But is that too much for the federal government to know what's coming in and what's coming out of your bank account?
So what? Cracking down more on ensuring people are paying the taxes they should be paying on their income at the rates they should be paying them at. There's a number of implementation mechanisms for that, and obviously the IRS can outline that more specifically than I can. But again, this is a proposal about how to pay for historic investments in childcare and education. If people have alternative proposals that don't raise taxes on people making less than $400,000 a year, that will help pay for this, we're quite open to them.
And one last one real quick. Mitch McConnell put forth, or basically said, that Republicans would be willing to go forward with plan. No, do not touch the corporate tax structures. To that is what?
Well, I think there's a counter proposal that we're going to have a discussion about with Senator Capito next week. There's lots of discussions at a staff level. I think the question there is he suggesting we don't need to pay for the proposal? It sounds like it, unless there's an alternative.
User fees, essentially, people who use
which again, as we've talked about, user fees would put the burden on the backs of the American people. Would make it so that people driving a car, it depends on what the user fees are, right? If it's basically a tax for the number of miles you drive, as an example, or other user fees, that means people making $50,000, $100,000, $150,000 a year are going to have to pay for these proposals. The 1% of people who are making over $400,000 a year can afford to pay a little bit more, but we can have a discussion about that.
Thank you, Jen.
Thanks, everyone.
Thanks.